This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, just putting a little news notice out there. I've hit my quota of headlines for the week because there was so much today.
Bad news, Carol. It's only Tuesday.
It's only Tuesday,
and there's big earnings this week.
Unbelievable.
A lot happening today, too.
I know, right? And you've got U.S. stocks kind of muddling along, folks. We're off our lows of the session, another record high when it comes to U.S. names overall. This is as Apple becomes the third stock in history to top $4 trillion in value, Tim.
Yeah. Also, Microsoft seems to cement its ownership relative with OpenAI to the tune of $135 billion. Nvidia taking a $1 billion stake in Nokia. I'm just looking at other headlines that are crossing right now that have just happened in the last few minutes. Did you see this, Carol? Uber's eyeing a fleet of 100,000 Nvidia-based robotaxis. That's beginning in 2027.
Well, let's remind everybody, big Nvidia event going on underway in the nation's capital. Jensen Huang just coming off, or I think, is he still speaking? I don't know, guys. Is he still speaking? All I know is keynote's over, lots of headlines, lots of big headlines, right? And so we are we're just kind of inundated, if you will. We're going to hear, actually, from Jensen Huang. He's going to sit down with our own Ed Ludlow because Nvidia took a $1 billion stake in Nokia. So we're also going to hear from the Nokia CEO.
Also, we're going to get a look at the U.S. economy. We've got the Wayfair CFO on what the consumer is up to in real time. That stock on a surge today, too.
Yeah, I think what's interesting is we're going to hear from really, things that really matter right now. It's all about AI and the tech spend in a big way. But also, what is the consumer up to here as we get ready for a Fed decision tomorrow, Tim? Yeah,
layoffs, too. A worrisome economic sign one day before that Fed decision. Matt Luzzetti, chief U.S. economist for Deutsche Bank, is stopping by in just a minute.
Well, needless to say, so much to come. Do not go anywhere. Lots to come over the next 60 minutes. First up, though, let's get an update on the trading session. We've got just about 2 hours to go until we wrap up trade on this Tuesday. Here is Charlie Pellet.
Lots of headlines. Yes, we got you covered here at Bloomberg. Do you want to begin with Nvidia? Yet another headline. Nvidia and Oracle are going to be building an AI supercomputer for the U.S. Energy Department. Nvidia shares, they're up right now by 3.2%. Oracle shares, they're gaining by 1.1%. We'll bring you a whole lot more on Nvidia and Nokia coming up right here on Bloomberg. Right to the equity markets. We're looking at records now, just under 2 hours to go. S&P 500 index trading higher by 23 points, up 0.3%, 68.98 where we stand now. Dow Industrials up 325 on the Dow, gain there of 0.7%. Nasdaq Composite Index up 181 right now, up by about 0.8%. Interestingly, though, on an update for much of the market, indeed records, a retreat for the Russell 2000 index of small cap shares, down now by about 0.1%. The Mag 7 index ahead of earnings out of 5 of the 7 members tomorrow and Thursday. Right now, that index is gaining by 1.2%. 10-year, 3.98%. Spot gold down another $21 the ounce to $39.60, down by about 0.5%. And West Texas Intermediate crude down 1.9%, $60.14 for a barrel of WTI. As we have been reporting, Nvidia plans to make a $1 billion equity investment in Nokia, an apparent vindication of the Finnish company's pivot from mobile networking gear into AI by the sector's kingmaker. Again, Nokia shares, they are surging up by 26%, and Nvidia up by 3.4%. And also, we're getting word that medical supplies firm Medline has filed for a U.S. IPO, seeking to list on NASDAQ under the ticker MDLN. For on-demand news, 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along with Tim Stenovec live here at Bloomberg headquarters in New York City. Well, the era of labor hoarding seems to be over, something we know that was done during the pandemic when workers were scarce. Another thing at play, the impact of artificial intelligence. And Tim, I feel like we're trying to get our heads around what is going on because it does feel like companies are letting go of workers, but then it's like, is it because of AI or other factors?
Well, let's go through some of the companies, and then we'll get to the big question about why and how AI is at play. Amazon plans to eliminate roughly 14,000 corporate jobs just after CEO Andy Jassy warned that AI will shrink the company's workforce. Amazon not alone. UPS, Carol, eliminating 34,000 jobs this year. We're talking drivers, package handlers, sweeping cost savings. Target, we talked about this last week, 8% of its headquarters team. Meta cut hundreds of jobs just last week in AI.
And then you've got Sequia Capital investing in an AI tool that could replace junior bankers. We also had a most read story, was it in the last week or so, about what's going on Wall Street or in the investment banking area. We could go on and on and on. So what does it all mean? Bloomberg's Jo Constantz is with us. She writes about work and management at Bloomberg News. She's the author of the Management and Work newsletter, joining us here in studio. We pass the baton to you, the big task. What is going on? Is it AI leading to job cuts? I mean, what are you hearing from the management of companies?
I think it's tough to disentangle, especially at this moment where we have so many macroeconomic pressures alongside, the promise of AI to increase efficiencies. So, it's hard, especially if you take Amazon as an example, it's hard to know exactly how much of this is really still unwinding all of the overhiring that happened a couple of years ago. And so, it's a little tough to parse out. And of course, saying we are going to be on the front end of this, we are going to be lean and efficient and poised to use artificial intelligence is a much better narrative than, we made a mistake and hired too many people.
Okay, I'm going to have you just give us your prediction about how this all shakes out. Are we undergoing some sort of industrial revolution or industrial revolution when it comes to AI right now that is going to allow us to be more productive, maybe work 4 days a week? And you're laughing. Was it the 4 days a week that? Yes. Was it the 4 days a week thing that got you?
Yes.
But if we think about other big movements in the past and adoptions of technology, this is what, led to the rise in leisure, or like going from a 6-day work week to a 5-day work week. Are we talking like something like that on scale?
I laugh just because, the talk right now in Silicon Valley is all about 100-hour work weeks. It's all about working even more, working 6 days a week, 7 days a week. So it's kind of funny. It's a little dissonant right now to think about scaling back. And I was reading a really interesting blog from a software engineer who is also a writer, who was saying AI agents are kind of like when electricity meant that we can suddenly work into the night. The craftspeople didn't have to put down their tools when the sun set. Similarly, AI agents can just keep working and working and working. So there's a compulsion for us to work.
Yeah, so great to have a smartphone where we can work on our commutes.
Exactly. So
get
anyway,
even more hours in the day.
The sarcasm.
Yeah.
Yes.
Well, I guess what we're trying to understand, and we're having some fun with this, but I mean, we're at this point where we have a government shutdown, not lots of economic data, some private reports, trying to understand, what is going on in our labor force. Is it indicative of a turn in a cycle, especially as we wait for the Fed decision tomorrow? We're going to talk about this with Matt Luzzetti in just a moment. But, is there something going on? Is AI an extra pressure that it's going to be cool on some levels, but maybe not so much for the workforce, which we all kind of seem to think when we first started talking about this?
Yeah, I think the context of this is companies are pouring billions into investments for artificial intelligence tools. And so they're really looking for a return on that investment right now. And part of that is cutting headcount.
So they have pressure.
There's pressure. There's pressure from boards. There's pressure from investors for sure. And there are some efficiencies that are coming from these tools, but it's not so easy to say, we have an AI agent that can directly replace a junior banker. We're not there yet. And it's going to be a while until we're there. So I think they're pushing to see how much more productivity and efficiency they're able to get from their current workforces for the most part, and holding that headcount steady. That's a big theme.
But is that productivity because of AI?
I think it's part of it. I think that's what they're hoping for. But I think that there's a disconnect between how enthusiastic and hopeful investors and executives are, and what the rank and file workers are expecting to get.
So labor hoarding over. It's a different environment. Do you feel like, just one last question, just 20 seconds here, are companies nervous a little bit about the outlook? Is there any of that you're hearing as you guys put out your newsletter and look at this world?
I think that there's a good amount of uncertainty, and for some executives, they're waiting to see how the models, the AI continues to evolve, and whether it continues to improve in the way that they're hoping and expecting.
All I know is they're all spending big time on this Tuesday. Joe, thank you so much. Bloomberg's Joe Constantz. She writes about work in management, Bloomberg News, author of the Management Work newsletter. Tim, we're going to stay on the economy. Jobs, tomorrow's Fed meeting.
Yeah, it is a Fed Tuesday after all. The U.S. government shutdown also now in its fourth week. We've got some private data points to share. Home prices gained the least in over 2 years, slowing for the seventh straight month in August. Buyers gained leverage in negotiations. Inventory actually grew. And then, Carol, there was consumer confidence for the month of October. It fell for a third straight month on dim reviews about the outlook for the economy and the labor market.
And ADP now releasing U.S. payroll data on a weekly basis. We got some numbers this morning. Hey, let's get to the U.S. economic backdrop. Back with us is Matthew Luzzetti. He's chief U.S. economist, head of U.S. economic research at Deutsche Bank, back here in studio. It's a lot. How are you?
Good. How are you doing?
Doing okay. How do you think... how are you guys thinking about AI and the impact on the labor force?
Yeah, I think, there's some clear evidence of it. I think the research that's out there kind of arrives at mixed results, and it depends on how you think about the substitutability between AI and the workforce. There's this really impactful paper by Eric Brynjolfsson and some colleagues at Stanford, which showed for particular categories, computer scientists, some call center workers, you saw, particularly for younger age groups, there's been this negative impact. I think when you look at the labor market across different demographic groups, it's a super interesting story. You have the 25 to 54 age group, what we call prime age. The labor market looks completely fine. Unemployment rate's low and stable. Employment to population ratio is elevated. Labor force participation rate is elevated as well. All of the weakness from a demographics perspective is in that lower age groups. Now, I do think some of this is related to AI. But I think more so it's reflecting what is a weaker labor demand backdrop and people that are coming into a workforce at a time where there's lots of uncertainty in the macro backdrop.
I mean, does that view change with Amazon and the 14,000 jobs that it's cutting, the 8% cut at corporate headquarters at Target, the thousands of jobs at UPS that will be gone this year? I mean, it just does seem like today we're getting a deluge of news.
It does, but I want to put those numbers into context. So when you look at the U.S. economy, you take the JOLTS data, we have 1.7 million layoffs in a typical month. 30,000 is a drop in a bucket relative to the typical labor market flows that take place. Every month we hire 5 million people. So the 50,000 jobs that we see added or 100,000 jobs we see added is the net of massive flows, millions of worker flows that are taking place back and forth. I like to look at the macro data that we do have. So far, the initial jobless claims data is not showing us really anything. We get WARN indicators, which is at the state level. Those haven't shown any deterioration or pickup. So I think it's important. It does fit into the narrative that AI may be impacting the labor market idiosyncratically here and there, and it is a story. But still, I think we're in an environment where layoffs remain low.
All right. So, Matt, is the overall U.S. economic backdrop okay? And Fed, hey, you don't need to cut rates tomorrow?
Yeah, no. Well, they will cut rates. We expect they cut rates by 25 basis points.
Should they, in your view?
I think that they have a strong story to cut rates, but they are dealing with this significant divergence between a growth backdrop that looks fine. We had close to 4% growth in Q2. Q3 growth looks like it's going to be somewhere between 3 and 4%. The Atlanta Fed tracker is closer to 4%.
Feels kind of okay to me.
That sounds, I think, fantastic and is not at all a reason to be cutting rates. But the labor market picture has shown some weakness. We've seen job gains which have slowed materially. There's been some upward movement in measures of labor market slack, all somewhat at the margins. But it does push the Fed in a little bit more worried direction about the labor market than inflation.
How does the lack of government data that we've gotten or that we haven't gotten over the last few weeks really muddy the view of how confident you think the Fed can be in what it says tomorrow?
I don't think it's too problematic for tomorrow, to be honest. We had the last FOMC meeting in September. We were only expecting to get one more jobs report between the September and October meeting. That can be supplemented a little bit by the ADP data we got earlier in the month. Yeah. Plus, we now have this weekly reading, which I would add, actually, this morning looked pretty good. If you aggregate it over the past 4 weeks, looks like the private sector added almost 60,000 jobs. That sounds low from a historical perspective, but when we think you only need to add 50 to keep the unemployment rate stable, it seems okay. I think it becomes highly problematic for the Fed in December. If we haven't had the government reopen, if we don't get an October inflation print, if we don't have an unemployment rate that's coming from the October jobs report, and a period of time where I think it's going to be a far greater debate within the Fed about what to do in December, I think that's when it becomes problematic.
I mean, you've got to believe the Fed's going to lean on whatever, the regional banks. There's got to be lots of conversations going on to get an idea of really what's going on. Having said that, in terms of the Fed, isn't it better for the Fed to be late rather than early with policy?
So I think this is always a debate that's ongoing, and I think that comes down to how they think about the risk distribution. I think for an extended period after seeing tariffs, they were more worried about upside risk to inflation, and therefore they were willing to be later rather than earlier in terms of cutting rates. Today, I think the risk distribution has shifted for them pretty clearly. They are now less worried about the inflation side, more worried about the labor market side,
right.
And therefore they are moving a little bit, not preemptively, but at least reacting closer to real time to what's happening in the labor market.
The 5 names that I won't want to say we got them yesterday, but they were kind of confirmed in a way yesterday for the next Fed chair. How do you view, not these people as individuals, but the fact that this process is playing out in such a public way, and whether or not that undermines at all the power of Jay Powell right now for the next few months?
Yeah, coming into this whole period, there was Secretary Bessent had floated this idea of having a shadow Fed chair out there that was kind of nominated long ahead of time, that could be out there speaking and trying to undermine, potentially divert attention away from Chair Powell. I think that there's probably some of that happening. We all know that Governor Waller is one of the top 5 candidates. He's on the short list at this point in time. He's been ahead on this idea of cutting rates because the labor market was weaker, and I think that has emboldened his position a little bit. Governor Myron, similarly, is coming out very aggressively calling for rate cuts. At the same time,
kind of know his playbook, right?
Correct. I mean, it's very clear he's going to dissent tomorrow in favor of 50 basis point rate cuts again. At the same time, you have a committee that I think Chair Powell continues to lead, and a committee that's very divided on the path ahead.
Matt, I want to go back to kind of where we started, and we were talking about labor market and AI and the impact. You focus on big economic factors, and this is a day where Tim and our whole team has been kind of laughing and being crazed and stressed in the newsroom because it's just one headline after another in terms of the AI spend.
Yeah.
A lot of it's Nvidia today, but it's not the only one. How do you guys, investors are looking for assurances when it comes to that AI spend, and whether it's the spend and the economic impact or the creation of jobs, how do you guys roll any of this into market strategy or economic strategy?
Yeah, I think...
And just got about a minute or so.
Of course, yeah. So in the near term, it's been all about AI CapEx boost that has happened. And if you look at the first half of the year, it was a tremendous driver of CapEx. So the contribution to GDP that we got from software spending and information processing equipment was the largest on record in the first half of the year. That said, if you go back to the late 1990s, we were seeing somewhat similar spending that took place and extended over 5 years. So the information processing, the tech boom that we had during that period, the CapEx spending was extended for a very long period of time. I think that remains to be seen how long this is going to be boosted. Eventually, I do think that this shows up in productivity gains. I don't think that it's shown up meaningfully yet. What I think we've seen in terms of strong productivity is mostly reflecting the fact that we had a very tight labor market for a period of time that incentivized firms to do capital deepening, CapEx, find productivity enhancing projects for a period.
And the only thing I would say is do productivity gains buy shoes and handbags and clothes and dishwashers and houses. You do wonder, right, if the workforce gets reduced as a result of AI. Thank you so much.
Thank you.
Appreciate it. Matthew Luzzetti, Chief U.S. Economist, Head of U.S. Economic Research at Deutsche Bank, joining us right here on Bloomberg Businessweek Daily.
You said it, Carol. AI news front and center. Microsoft and OpenAI cementing their relationship. Nvidia investing in Nokia. More when we continue.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. A rally in the world's largest tech companies sending stocks to records, right to the numbers here. We've got just about 1 hour, 39 minutes to go ahead of the closing bell. S&P right now up 31, trading at 69.06. That is a gain of 0.5%. The Dow up 395, up 0.8%. NASDAQ up by 1%. The NASDAQ 100 index up 0.8% on an update for much of the market, though. The Russell 2000 index lower, little change, down under 0.1%. 10-year 3.98%. Gold down $22 the ounce, down another 0.6%, 39.59. West Texas Intermediate crude down 2%, 60.08 a barrel, and Bitcoin up 0.6%, 115,182. Apple hit $4 trillion in market cap, making the iPhone maker only the third public company in history to reach that milestone. Apple right now up by 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Nvidia shares, just to rehash, up about 4% today. This as the Nvidia GTC event is underway in Washington, D.C. Jensen just off the stage giving his keynote. Also there is the co-host of B-Tech, Ed Ludlow. Ed, so many headlines, hard for us to keep up. What really matters? What's news in terms of what we got from Jensen?
Yeah, for the market, it's the idea that this big cycle is alive and well, right? What Jensen Huang said is that for their Blackwell Rubin generations of accelerator cards, they're expecting over the next 6 quarters to ship 20 million units, which equates to $500 billion of revenues. There's a lot that Nvidia didn't say about that number, by the way. He's literally standing on stage and there's a slide behind him. We don't know if it includes other gear like networking, and if it strips out the impact of other generation of processors. What we do know is that $500 billion figure excludes China. And so the market kind of took that and was like, okay, what is Jensen Huang trying to tell us here? And it's this idea that maybe we're not in an AI bubble. You know, that they have line of sight for many quarters to come, that all of this, like macro level investment on the infrastructure, but now increasingly a broad range of industries is buying into the thing that Jensen Huang's trying to sell.
Ed, you're going to, in just a few minutes, be speaking with Jensen Huang, along with Nokia's CEO as well. Nvidia will invest $1 billion in Nokia in an AI networking push. Ahead of that interview, what are the details our audience needs to understand about this deal?
I mean, this was the surprise piece of news, probably, because look at Nokia's ADRs. I think they're still up 25%, right? The structure of the deal is that Nokia will look at using Nvidia's infrastructure for training purposes, strategically looking at AI. Nvidia will look at Nokia's mobile networking gear in its own data centers. But the main thing is that this is strategic. It is about national security. In the first instance, they're talking about cooperating on 5G networks, but then the future 6G network. And think about who the big players are in that market, particularly in Europe, the Middle East, and Africa. Number 1 is Huawei. Number 2 is Ericsson. Number 3 is Nokia. This is Nvidia making a pretty significant investment and bet on a domain they're not yet in, mobile networks. But I think that when we have this conversation, we have to talk about what was it in this for America. Beyond just the investment that Nvidia is making. So, lots of headlines from Nvidia. I mean, I'm just looking at all of them, and including partnership with Palantir. There's something with Lucid, Nvidia teaming up on driverless cars. There's just so much stuff here. What do investors who've been on this ride with Nvidia in terms of buying up the share price, making it one of the largest market caps out there, what should they be asking of this company right now, or what should they be watching out for? Yeah, it simply will boil down to whether the technology industry and Nvidia's investors share Jensen Huang's vision for the next 5 years and beyond, the future. He went through basically the entire history of American technology from the invention of the transistor onwards. Actually, he brought up the light bulb and Edison, but we won't go there. And the point that he's making is that he's trying to say we're in the next phase of this. We went from computing to accelerated computing. We have built out the infrastructure layer when it comes to data centers, but he wanted to look us at these other parallel industries, robotics, autonomous driving, as you pointed out. They didn't say much about healthcare. And the one thing that jumped out at me that Jensen Huang said was the AI chatbots are now worth paying for. And if you take that in aggregate with Jensen Huang's commentary on where we are with Moore's Law, it seems to be that he's saying we are not in an AI bubble. And if I get a minute or two at the end of the interview, I'm going to ask him, are we not in an AI bubble?
All right, a good preview there. Before we get there, Ed, and this is just the last question we have for you right now. You know, we talk to you quite a bit all over the country. Oftentimes, though, you're in California, you're in LA, you're in San Francisco. Sometimes you go to a facility in the middle of the country. I don't recall ever doing anything with you at a big tech event in Washington, D.C. I think the fact that GTC is happening in Washington, D.C. is a story in and of itself. What's going on with that?
Yeah, so, I mean, there have been GTCs in DC before. It's the first time that Jensen Huang has made a keynote at it. And, you know, based on our reporting, I think there was a very firm expectation when this date was announced that the President of the United States would be here. And, you know, Jensen Huang this morning, I believe he spoke to reporters on the way in saying effectively that. We know that the President is expecting to see Jensen Huang tomorrow in Asia. So I'm assuming he's done talking with me and then gets on a plane and goes straight to Korea, I believe. So that's what this was about. It was about us being a few blocks away from the White House. And throughout the course of the presentation, you know, Jensen Huang was complimentary about the president's policy base, from energy through to some broader topics on deregulation, and what that's allowed Nvidia to do. The big unanswered thing was what happens with China. And that is the question to ask. Yeah, massive, massive issue. Hey, we're looking forward to that interview coming up a little bit later on this hour. That is, of course, our Ed Ludlow. He's co-host of BTech. He's out there in Washington, D.C. at NVIDIA's GTC event. So, again, we will be hearing from Jensen Huang and also the CEO of Nokia on their deal that was announced earlier today. As we've said, Tim, there's just so much coming at us on this Tuesday, and a lot of it is because of NVIDIA. But there's just so much going on when it comes to AI-related news today. Yeah, OpenAI continues to forge relationships, as does PayPal. The two announced a tie-up whereby PayPal's digital wallet will be embedded into ChatGPT. It'll send PayPal shares up the most in more than 6 months, or it did send PayPal shares up the most in more than 6 months. And then the Microsoft news that we've talked about quite a bit, Carol. Longtime backer Microsoft, a 27% ownership stake in OpenAI. This part of a restructuring plan that took nearly a year to negotiate. It removes a major uncertainty for both companies and clears the path for ChatGPT and the maker of ChatGPT to become a for-profit business. It's a lot. So let's get into it, and really just how OpenAI continues to be at the center of so much. But we have so many questions about why Microsoft is doing this at this time. Bloomberg Intelligence senior technology analyst Anurag Rana joining us from the Bloomberg News Bureau in Chicago. Anurag, why is Microsoft doing this? Did the company need to do this, kind of cement that relationship financially and otherwise with OpenAI?
Yeah, I mean, they had to do it because OpenAI has been, raising capital with the idea that they will go from a not-for-profit to a for-profit company, eventually going public someday. So, I mean, this had to be done. The big contentious were, there are so many things that they were arguing against, revenue share, technology share, all sorts of different things. Microsoft had control over which cloud providers that they can use, etc. So this new agreement kind of cements a lot of those things, removes a big overhang that's on, I would say, more on Microsoft than on OpenAI, frankly, because Microsoft is using OpenAI's technology in their products, in the Copilot products that are out there. That's, I think for us, that's the most important thing. Frankly, it's not so much the other financial details. Since Microsoft will have this 27% ownership stake in OpenAI, can we look at Microsoft's share price on a daily basis as some sort of public proxy for OpenAI and how investors are valuing OpenAI? Or am I trying to do too much math here? No, I think that's a bit too extrapolation over there. The thing that you want to focus on is, for how many years will Microsoft have access to OpenAI's leading models? So when you look at frontier models, you have OpenAI, perhaps, most in the lead, then you have Anthropic and Gemini. Those are the three big ones that everybody talks about. Down the road, Microsoft needs to make sure that the Copilot products that they are selling out to the public, both on the M365 and then the GitHub Copilot, which is used for coding, they really have an alternative to OpenAI. One answer could be they have their own models, but they're not there yet. So this contract, extend that to 2032, which is, you can say that they're giving themselves 7 years to figure this thing out. Help me out, though. It's just like OpenAI and Microsoft. I'm looking at the Bloomberg, OpenAI and PayPal, OpenAI and SoftBank, OpenAI, pick your company. They are just, I feel like, lining up deals or agreements or relationships with everybody and anybody. I mean,
Microsoft, I mean, are they going to have to share the wealth, if you will? And does it become a little bit messy? Because I'm just assuming that there will be companies that maybe in some ways are also competing with Microsoft that have deals with OpenAI, or is that not right? I don't know.
See, it's a very common thing in technology. Almost everybody who's competing with each other are also working closely with each other. So that's that's on the side. But when you look at OpenAI, that's an area where you and I use ChatGPT a lot. But imagine that now what you can do is, let's say they have a partnership with Walmart. With PayPal today, you are looking at a product and you decide that you can just buy the product seamlessly from that. They have a similar agreement with Stripe and Shopify. So what OpenAI is basically saying, let us be the front end for a lot of what you're doing, let's say on the consumer side. So example that I gave you is more for a retail purchase. Mm-hmm. But on the other hand, they also have a deal with Salesforce. So for example, if you are in ChatGPT and you want to look at your Salesforce application, you can do that as well. So OpenAI wants to make sure that they are the front end for a lot of discussions that are going to happen. And that's where I think a lot of the fighting is going to be down the road.
Anurag, we had this conversation with Jan van Eck of Van Eck yesterday, and he talked a lot about AI and the AI trade, but he also mentioned some stats about when web traffic is going from ChatGPT to websites. And it got me thinking about how people are increasingly replacing or supplementing what they do on the internet using ChatGPT. The news today, too, that this potential PayPal tie-up where you can pay for stuff within ChatGPT also got me thinking, does Alphabet have to be scared about its core business here?
But that's been the case for so many years. I mean, people have been talking about this the first day ChatGPT was launched, that, what's going to kill Google's search business? I mean, so far, I haven't seen those numbers that are out there that it's having a very large financial impact. I'm sure there is some share loss in searches, but I haven't seen it. So we'll see, how this shapes up. Google has, or Alphabet has, a lot of interesting assets. I mean, they have semiconductors that are very important. They have a cloud platform. They have a large frontier model. So I think they have all the pieces out there. The question is, whether the market is big enough for a lot of them to exist or coexist at the same time.
Hey, Anurag, over the summer, Bloomberg put out how OpenAI said Elon Musk identified Mark Zuckerberg as one of the people with whom he had communicated about potentially financing a deal to purchase OpenAI. Does this Microsoft deal put an end to any other big player coming in? I mean, this is theirs.
I think so, but again, legal ramifications are such that you don't know how some of the judges will move towards. But this is basically OpenAI saying we have figured out a way to how to go, you could say become become for profit, and eventually someday go public.
Yeah, that's going to be interesting, right? I mean, listen.
At what valuation?
Well, and for OpenAI, but for OpenAI, right? They can kind of stop the money grab for now, right? Because they just got a massive cash infusion. Yeah,
but they are also spending at the amount that nobody has seen. I mean, they have a very large contract with OpenAI, with Oracle, and they, today with this agreement, they've committed another $250 billion of computing capacity with Microsoft. So it's, their expense is far exceeding the revenue right now. They are doing these, you could say investments so that down the road they can recognize the value of some of these investments. So that's, I think, where the mismatch is for a lot of people. And so unless there is some equilibrium, I think it's going to be very tough for them to go public.
Yeah, the money flows around AI in, out is like phenomenal. Anurag, you too, phenomenal. Thank you so much. He is Bloomberg Intelligence Senior Technology Analyst out there in our Bloomberg News Chicago Bureau. Just a quick check on shares of Microsoft, Tim. They've been up as much as 4% in today's session. Still, though, a gain of about 2.2% in today's trade.
Yeah, how about Nvidia? Shares up another 4.3% in today's trade, close to session highs, just hovering around session highs. We're going to have more on AI and the deal between Nvidia and Nokia In just about 10 minutes time, BTech co-host Ed Ludlow sitting down with Jensen Huang, the co-founder, president, and CEO of Nvidia, along with the president and CEO of Nokia. That happening in just a few minutes.
All right, so we're going to get back to that. As we said, tech focused today, but we're also thinking a lot, as we talked about with Matt Luzzetti earlier, we're thinking a lot about the U.S. economy. We do get a Fed decision. 24 hours from now, we will have that Fed decision, and we are expecting a rate cut. But we wanted to talk a little bit more about the economy and do it through the lens of Wayfair. Those shares are surging as much as 24% higher in today's session. The stock trading near the day's high, even at this hour, which is the highest level since April of 2022. The e-commerce home furnishing retailer reported net revenue and adjusted EBITDA for the third quarter that easily topped expectations, Tim.
We've got Kate Gulliver, Chief Financial Officer of Wayfair, back with us. She joins us from Boston. Kate, good to have you back on the program. Thanks for joining us. Investors certainly loving the update on the business. How is business? How is it kicking off in this final quarter?
Yeah, thank you for having me back. Happy to be here. We're obviously quite pleased with the third quarter results and the subsequent reaction to them. And I do think it shows, all the work that we've been building to over the last few years and the enduring strength in the model. And so you saw that top line come in pretty nicely at 8%, net 9% adjusted for the German business. And that really is compounding share gains there on the top line. And that, of course, flowed through quite nicely to adjusted EBITDA gains.
How would you describe the consumer?
Yeah, it still remains for us that the consumer is quite focused on promotional events. And so our consumer is typically a woman, mass market, and she needs those promotional events to really come in off the sidelines and get excited to shop. We've talked in the past about, how the promotional events really work as a marketing banner to get someone interested in the category and to then bring them into the site. And that is still the case. Those promotional events are pretty necessary to get the consumer engaged and excited. We do see relatively more strength in that higher end consumer. For us, that's consumers that are transacting on our Paragold site, which is our luxury brand, or specialty retail brands. We've said that those are actually growing at a faster rate than the core Wayfair.com business, and you are seeing more strength in that consumer segment.
Talk about promotions. You mentioned them. You have to get consumers excited. Do you have to get them more excited now than you did in any other part of this year? We're really trying to understand the economic environment out there.
What's interesting is this category in particular has been down for so long. So the category, obviously boomed during COVID and then had a pretty significant pullback 22, 23, 24. So throughout 24 and 25 for this category, promotions have been critical. I would say what we have seen, really throughout 25 is there's also been some mix shift dynamics in addition to sort of higher end consumer and mass market consumer. You do see consumers that are shopping for, things like decorative accents, decor, maybe things with a lower ticket than, buying a new couch or a new chair. And I think that's the idea. Someone wants to refresh and is excited about that, but they want to be mindful of how much they're spending. And so they're looking for the smaller piece as maybe opposed to the big piece.
Well, to that point, Kate, I think about the pandemic. We realized that's the anomaly. I mean, I'm looking at your stock is up 142% this year, which is quite a run, but it's still down about 69% from 2021. We know everyone was at home, spending on their home. That's why people were working at home, spending on their pets. There was a lot of stuff going on. So I am curious about when you look at the third quarter growth, how much came from intrinsic share capture versus category stabilization? Because it does sound like we're seeing a lot of stabilization here.
It's a great question. We think the category itself is roughly flat to slightly down. So I do think the category has stabilized. And we see that. We look at a variety of different data sources and, they're all slightly different, but they coalesce around a flattish category. This is in contrast to last year where the category was down maybe, mid-single digits to high single digits. So that's certainly an improvement, but we don't yet see the category as having returned to growth. So when we look at sort of 8% growth, right, that's definitely us gaining share on a category that is, say, flattish.
When consumers are buying from Wayfair, are they buying to replace stuff, or is this trade-up activity? What is the data telling us or telling you?
Yeah, that's a great question. We're certainly starting to hear that a bit from folks. Have we hit replacement cycles? And really, to the conversation we were having around the pandemic, it speaks to so much of the pull forward in demand that happened during that pandemic period. I think we see a few things that drive purchase events. One is moving, and obviously that part of the category has still been quite suppressed. One would be life cycle changes. Mm-hmm. So, your kid, you had a baby and now they're moving into a toddler bed, or the kid's leaving the home and you're turning their bedroom into an office. So sort of as your life cycle evolves, regardless of if you're moving. And then a third would be, replacement categories, or sort of, zhuzhing up your room. In replacement cycles, I think a lot of folks are eager to see if, what was bought in 2020 and 2021 needs to be replaced at this time. And I think what's helpful to understand there is it's just very category by category specific. So if you bought, opening price point outdoor furniture, and you live in the Northeast, maybe 5 years is, an appropriate time frame. But if you bought a, nice couch, you're certainly not hitting the replacement cycle on that yet.
I got to say, I love zhuzhing. I love buying pillows, but I'm afraid if I bring any more pillows home, my husband's going to divorce me, because he's like, I can't even find I can't find the bed anymore. Hey, listen, you talk, Kate, about the higher end brands like Paragold. You're seeing some strength certainly in that area. I am curious too about your retail expansion, the physical store retail expansion, or your loyalty program, if that's adding incremental customers versus shifting existing digital ones. What are you seeing on that front?
Yeah, great question. So on the physical retail side, we are adding incremental customers. We're actually seeing in our first large format Wayfair store that's been open for a little over a year now, more than 50% of the folks who are transacting in that store are actually new to the customer file. We have 100 million customer file, right? So to be getting new customers at this stage is pretty exciting. So it's definitely acting as a way into the brand. Paragold, we actually just opened 2 stores for Paragold. So we opened one in Houston in the spring, or sort of early summer, and then we just opened in West Palm Beach in Florida a week ago. So it's very early days on those stores, but we do think that they should work as a nice customer acquisition channel. The loyalty program, which is about a year old, I would say that's acting more for existing customers to get them to be increasingly sticky with us. So what we're seeing from loyalty customers is nice incrementality. Meaning, if they were going to purchase, 6 or 8 times a year, and maybe they were buying 1 to 2 from us, hopefully we're getting that next purchase, that second or third purchase as well now.
Kate, on the layoffs that we've heard from other companies just in recent days, Amazon planning to eliminate roughly 14,000 corporate jobs. This as Andy Jassy warned that AI will shrink the company's workforce. You have a 2,500 person tech team. How are you thinking about headcount? Are you reallocating headcount toward AI applications? Or are productivity gains allowing you to do more with a similar cost base? What are the numbers there?
Yeah, it's a great question. Actually, our CTO, Fiona Tan, was on our earnings call this morning speaking to some of what we're seeing from AI, both on the top line perspective and where we're going with, personalization, but also on, efficiency. Every employee in the company, not just in tech, is actually enabled with AI, tools and AI resources. And right now, what we're seeing is really nice, efficiency and enhancements to individual employee work. And then in different pockets throughout the company, including within tech, as we use more specialized AI tools, you see, uptick in efficiency there. I frequently actually talk about our legal team. So not a tech team, but a team that, has been able to adopt AI quite rapidly for document review, and the ability for them to sort of manage, for example, increased lease load as we've been expanding the physical retail network without having to add incremental folks has been pretty impressive. And so we certainly are seeing gains, from that efficiency internally.
Hey, do you feel like, though, in this environment that you want to be lean and mean? I mean, I guess I feel like all companies want to be lean and mean, Kate, but I do wonder if you're seeing, as you look down the road, we are in this funny environment, funny, not funny, haha, but funny, difficult, in that with the government shutdown, we're not getting data. So we're trying to figure out by talking to folks like you, where we are in our economy. So do you feel like there's pressure to be leaner and meaner than maybe, I don't know, a month ago or so, or you feel more confident about what's kind of coming down the road here?
I think you framed it well, Carol, when you said you should always feel, the importance of being lean and mean. We're a mass market retailer, right? We operate on basis points of margin. So we absolutely need to be maniacally focused on cost at all times, regardless of the macro that we're operating in. And over the last several years, you saw us go through a number of restructurings, frankly, to bring down that overhead cost pretty significantly. Our most recent restructuring was actually March of this year, where to the conversation on tech employees, we did lay off some of our tech team as we completed our replatforming exercise, and we're able to actually increase some efficiency on that team, pointed more of those resources, towards AI, et cetera, as they have stayed. So, we continue to be quite focused on efficiency and efficiency gains. We feel good about, where the team is right now and the efficiency that we're seeing from that operating team. But that comes on the heels of, several rounds of restructuring over the last 24 months.
Well, on AI, on the consumer side, when it comes to AI, I'm wondering about the traction from Muse and Decorify, the decorating platform, the new pilot. How has that been with shoppers so far? Is it driving broader consumer adoption of AI-led design?
Yeah, so we've tested out a number of AI, tooling as it relates to how the consumer can experience our website. We offer millions of different SKUs across thousands of suppliers across a wide range of styles. So the holy grail is really personalization. And how do all three of us may be searching for, those throw pillows for the bed that Carol was talking about, and we all may have a different aesthetic. So how do we land on the site and get to our aesthetic as fast as possible? Decorify and, now we have a tab on the app called Discover. These are ways for individuals to sort of browse and engage in a way that should be more personalized for them, and we do see great engagement there. But even on, the main part of the app, so not using one of these specialized tools or the main part of the website, we are using generative AI to make that experience better. We spoke on the call this morning about combining generative AI from a merchandising perspective with actually human designers. And for folks that landed on those SKUs that were the combo of the both, we saw a third, uplift and sort of engagement with that SKU. That's really exciting because that means that SKU is probably far more relevant to you than where you were going to land before.
All right, great stuff as always. Great read on what's going on in retail and certainly the consumer. Kate, thank you. Kate Gulliver, Chief Financial Officer of Wayfair. And so we did talk about AI there with Kate a little bit in a broader conversation. It is a very big theme for us on this Tuesday. This says we are seeing shares of Nokia ADR soaring on news today on the news that Nvidia plans to make a $1 billion equity investment in Nokia. It's an apparent vindication of the Finnish company's pivot from mobile networking kit into artificial intelligence by the sector's kingmaker. We've got all the details.
And Nvidia CEO Jensen Huang, he's the co-founder, president, CEO of Nvidia. He's sitting down right now with Justin Hotard, president and CEO of Nokia, along with Bloomberg Tech co-host Ed Ludlow. Take it away, Ed.
Thank you, team. Jensen, I'll start with you, if I may. I want to try and understand something you mentioned very briefly, which is the strategic importance of not just the equity stake, but the partnership on technology, and not just for Nvidia, but for America. Why are you moving into this domain?
One, we announced a brand new platform for a new market we've never been in. And so that's number one. Number two, if we take advantage of this transition from general purpose computing to accelerated computing, from old types of software to AI, we can take advantage of this transition of AI and 6G for America to win back telecommunications again. It's been a long time since the American telecommunication network has been built on American technology.
You used the word national security, I believe.
For national security reasons, for economic reasons, our industry should be built on American technology, and for the very first time, we can do that. We have a brand new product line that takes advantage of computing, accelerated computing, and AI, and we have a great partner to help us do it with, Nokia.
The market reaction kind of speaks for itself. There was a time when Nokia was already looking to America. You've been in the role since April, but may I start by asking you what role the administration played in bringing you both together, if this is indeed a strategic priority?
Well, I don't think there was anything specific that the administration did, other than they've created the environment to support innovation. I mean, Jensen's talked about manufacturing, but it's also about R&D and innovation and technology leadership. And if you think about where this world is going and all those incredible devices that are going to be built on NVIDIA platforms, robotics, autonomous vehicles, augmented reality, virtual reality, we need a different kind of network in the future. And that's what we realized. And that's why we wanted to forge this partnership, so that we're building a network leveraging AI for AI services. And that's really the big change here.
And the technology is flowing both ways. I mean, what is it that you will be able to do with Nokia, Jensen, that you weren't able to do on your own?
Well, first of all, Nokia is in all of the world's base stations. and this AirScale platform of Nokia's and millions of base stations around the world. If our computers are not inside that base station, it doesn't help. It's no different than Nvidia's tech computing platforms not inside a car, it doesn't help. And so the first thing is we need a partner to get us into the world's space stations. We also, remember, we're bringing AI to radio networks, AI to RAN, so that we can make wireless tech communications a lot more efficient. Second, we're bringing AI for the radio, meaning on top of these radio networks and these telecommunication network, we're going to be able to provide AI services, which is going to be able to make it easier for us to do robotics and autonomous vehicles and industrial automation and reach all of the different places around the world. That's kind of hard to do with Wi-Fi. Cellular reaches everything. And so we now have this fabric that we can deploy AI computing services on top of. It's going to be completely revolutionary.
In your world and in your market, Huawei is an influential player, not just in Europe, I think also about the Middle East and Africa. How important is the relationship with Nvidia to be able to counter, what Huawei does in those markets?
Yeah, look, I think for us, one of the principles I've had with my team since coming in has been do what we can do that no one else can do, and that is AirScale, what we do with any RAN software, the software that runs on it that we're going to be putting on the Nvidia Arc platform. Do what we can do well and partner with the best everywhere else. And this is a clear opportunity to partner with the best. And by the way, that's where America and the Western world succeeds, because we don't necessarily have one company doing everything like Huawei. We succeed because we partner aggressively. And if you watch GTT today, it was hard to not find it obvious that you're partnering with everybody. But that's the advantage, is this partnership. So we do what we do best. We let Nvidia do what they do best, and ultimately our customers win. And ultimately, for America, I think America will win because there'll be more innovation faster here.
Nobody knows telecommunications better than Nokia. They've been at it for a long time. They're all over the world. And between our two partnerships, we now have wireless telecommunications, we have AI, and we have accelerated computing, all in this partnership. And so all of that capability is going to be brought to bear for the next generation of 6G. And I think that's the capabilities we bring together in this partnership is quite unique and formidable.
Why was it important, Jensen, that Nvidia ends up with almost 3% of Nokia? What was the rationale behind that?
The work that we're doing is so intensive, and quite frankly, I was so optimistic about it and so excited about it, and that we wanted to invest in Nokia so that we could be part of this incredible success that we're creating together. And I got to tell you that move was pretty genius, wouldn't you say?
That's not for me to comment on. What I'd observe is, a 25% jump in the ADRs. What does that signal to you? Nvidia, with respect, Jensen, I've known to be about speed. Is it that they're giving you a technology that you wouldn't otherwise have, or have you now a way of just moving faster?
Yeah, it's both. I mean, there's obviously, there's no way we're going to have NVIDIA's technology and accelerated computing. I mean, the CUDA software stack, all of the capabilities, even the fundamentals of what's in Ariel, the software stack that NVIDIA has built, is an accelerator for us. And then it's about speed, because now we can innovate much faster. And for us, it's that shift into adding value in software and thinking more like a software company, or really not like a software company, like an application company that's going to use AI and AI models to continue to innovate and move faster. And I think the market recognizes that this is the kind of innovation that this industry has needed. Look, this industry has a history. 3G, we were building better voice networks when the internet was getting started. 4G, 5G, we were building data networks behind where the market was. And today, 5G, when you look at it globally, is still only partially deployed. So as you look ahead, in order to innovate, you've got to move much faster. And we need to enable our customers to have different and better technology.
And with this partnership, all of us, speaking of speed, we're in Blackwell today. It's going to go to Rubin. It's going to go Feynman. And it's going to go on a clip. That basically is at the speed of light. And
I've got to ask you to clarify something, Jensen. You showed a slide behind you. $500 billion over what I think illustrated 6 financial quarters, but 20 million Blackwell.
5 financial quarters.
5 financial quarters. Does that figure include networking? We know it doesn't include China, because it seemed to be technically above consensus, right? But you seem to be suggesting that there is near term actually an acceleration beyond what you were expecting.
All of that was only data center.
just data
That's
center.
the amazing thing. All of that is only data center. Today we announced several new platforms. The Nvidia Drive Hyperion platform, our Arc platform, our Quantum platform. None of that is included in that $500 billion.
No networking.
No networking whatsoever. Well, that's data centers, so networking, Nvidia networking for data centers, but not wireless networking, not wireless telecommunications.
When do we see a real-world manifestation of the work that you're both going to do together?
Yep, there's work going already. You can see a demo actually at the booth here in GTC. You'll also see customer trials early next year, and then we think in full commercial production in 27. And the great thing about the partnership with Jensen is I know he'll be pushing me to go faster, and I'll be pushing his team to go faster, and together that means that we can get to market as soon as practical for our customers.
And Arc is backwards compatible with AirScale.
Right.
And all of those millions of base stations could be upgraded to 6G and AI.
There's a lot of skepticism on 6G, though, right? Like, we're agreeing standards. Just a simple yes or no question, really. Is the 6G timeline accelerated because of this partnership?
I think it is, because what you can actually do now is, exactly to what Jensen said, you can deploy with Arc, and then if something happens or the standard evolves or there's changes, it'll just be a software model update that we deploy in applications. It's a completely different model than what we're used to back in the days of deploying these complex integrated legacy appliances. It's general purpose accelerated computing, and that's why we think it's so compelling.
If the standards change, you got to go fix a chip. If the standards change, you're Jensen and I just upgrade the software, the CUDA software. That's the amazing thing.
Jensen, you are traveling onwards now to Asia. I don't know what your schedule is for the jet, and I don't know if you and the president will be at the same place at the same time. He seemed to think you would be. But the main point is that you're here in Washington, D.C. We're a few blocks from the White House. You called it the AI Super Bowl. Others called it that too. But everyone is inferring from this that this was about all of the things we talked about all year, that you want to be closely aligned with this administration. And while in Asia, that there is something that the president needs to work on in the context of China trade negotiations. Whether you get to meet him or not, what is it that you need the president to do for Nvidia to accelerate on its plans?
We need the president to do what's right for America, and I'm certain he's going to go do that. The reason why we're here is because technology is now so important in politics and geopolitics. It is the single most important industry in America. It is our national treasure, and it's important for us to make sure that Washington, D.C. and the policymakers and all of the people who serve our country to make it great understands the technology as it stands today and where we're going to go and the companies that matter to us so that we can make America great. And so that was the primary reason. Well, first of all, whenever there's an opportunity to see the president, I always love that. He's incredibly engaging. He's always learning, and he wants to help America win. He wants America to win.
This is my final question. I was trying to interpret what you were saying. It was a detailed presentation, but you talked about how AI is now worth paying for. You talked about the end or not of Moore's law, depending on your point of view, but the need to scale to meet demand. Was that you saying we are not in an AI bubble?
I don't believe we're in an AI bubble. And the reason for that is we're going through a natural transition from an old computing model based on general purpose computing to accelerated computing. We also know that AI has now become good enough because of reasoning capability, research capabilities, its ability to think. It's now generating tokens and now generating intelligence that's worth paying for, to the point where I'm paying lots of it. Cursor is all over Nvidia. Every single one of our engineers use it. We pay lots and lots of money for it, and we're delighted to do it. And Cursor is just one of the applications. What is it? 11 Tech, I forget. But anyways, all of these different AI models that we're using plenty of services and paying happily doing it.
Justin Hotard, the Nokia CEO, Jensen Huang, Nvidia CEO, and our host here in Washington, D.C. Thank you both very much. Back to you.